Righty tighty. So, I think that's 12 o'clock. Let's crack on. Ray, we are talking about risk today. Chris, are we having a Siam's Little Ninjas lesson today? No. Yeah, this is my dojo library, everyone. So, it's the dojo. Yeah, with library. There's not many actual real books here. All of the books I read are on Audible. So, I don't know, there's only, probably 100 books here or so, but way more on Audible. Books are just for show these days anyway. Right, so let's crack on. Yeah, 12 o'clock. Let's get going. So, I think this is going to be the last live session I do on a Wednesday. Wednesday is my daddy daycare until 1400, so, and it's always a bit of a chore, or not a chore, like I have to manage this thing. Wednesday is when he doesn't go to school, and so yeah, and so I basically have to spend all morning making sure he's asleep for like 12 o'clock, and I think I've mistimed it today. Sometimes he takes for ages to get to sleep, and I have to literally put him in the carrier and dance and sing with him, and today he just fell asleep like that. So he should be waking up in about 15 minutes, and so when he does, we're gonna have to end this short. So yeah, so Alex, so today's session is all about risk. Risk is my favourite topic. I've been fascinated by risk pretty much all of my life because I've been doing pretty stupid things all of my life. And yeah, and Alex, you're right. So I'm talking about risk whilst doing a live session with a sleeping baby. Show and tell again. This is risk. There's not much reward for this, but there's definitely risk. So, yeah, I guess I am, from a very early age, I've been into gymnastics, parkour. I mean, I was doing free running before it was even called free running. I was like jumping off bridges and stuff like that. And for anyone that went to Gresham's in Holt, there is a bridge at Gresham's which is pretty freaking high. And I jumped off the top of it when I was, I think, 16 years old. And what I did was I basically started from 10 steps up, 15 steps up, and I kept working my way through it. So yeah, if you go to Google Maps and type in Gresham's School in Holt, that's where I used to go to school, and there is a bridge connecting both sides of the school. That is the bridge I jumped off, and it's I'll have to go and measure it from Google or something, but it's really high. And the thing is, when I look back on that bridge jump, which is the biggest, I mean, it's like a it's taller than a 3-story building, or three floors. It is ridiculous. Like, I think a lot of people probably would have died if they did that, and I was lucky just to twist my wrist and my ankle. But when you're younger, your risk centers, the part of your brain that judges risk, doesn't fully form until you're 25 years old, which is also really fascinating because you can't join the Air Force as a pilot unless you're young. I think the cutoff age is like 25 years old. And so what happens is you have like all of these young 18-year-old, 19-year-olds like learning how to fly a military aircraft, yet our risk center isn't properly established yet. And so again, I've always found risk fascinating because I've always been a risk taker. And I remember like my first solo in the Air Force, flying a plane on your own, and to be honest, I just dicked about. Yeah, it's just crazy, some of the stuff I got up to. Anyway, so obviously risk is in every part of our lives. People think, risk is just for trading, yada yada yada. But when you fully understand risk, you can really control your life to an extent where you sort of know what your outcomes will be in a long period of time, whereas a lot of people they don't, and it's because one thing is that people think too short. They think they're only thinking 1-2 year batches, and so what tends to happen is that you'll go one direction for a year or two, and then a completely other direction for a year or two, etc., etc., and you never really you don't have cadence towards a certain path, so to speak. And so when you can control risk, it really does help, even if things go wrong. So and ultimately, risk is simply statistics and probabilities. And when you get into it, a bit of Googling for you here, research micromorts. So micro, M-O-R-T-S. So a micromort is a unit of death, basically. So everything in life has a risk measurement of death, pretty much. So yeah, it's basically, more is the word death, basically. So micromorts. And like riding a car will have a certain amount of micromorts, etc. But then risk is, you have instant risk and prolonged risk. So for example, riding a motorbike from A to B will have a certain amount of micromorts, but those micromorts will be far less than if you were to do that same journey every day. So risk is then accumulative, because again, risk equals statistics and probability. And so the more times you're riding that motorbike from A to B, you're basically giving yourself a bigger data set and more sort of odds of getting knocked over, so to speak. And so yeah, motorbikes, etc. Has a higher micromort than riding a Jeep, I don't know. So, and this is one thing I've always sort of battled with my wife originally in the early days, because when I left the Air Force, I was dicking around in helicopters. I was getting my commercial helicopters license, and so a lot of my friends, like, I was just landing my friends' gardens and picking them up and then flying to a random golf course, having a round of golf or a hotel, etc. And it was really fun because you had to hour build. And yeah, so like when I was doing that, a lot of my friends were like, oh, I don't want to go in a helicopter, and then they'd see the helicopter. It was a Robinson R44, or an R44. It looks a bit flimsy, and people are like, and so I'd have to then explain the risks, as in the micromorts, etc., you know, compared to a plane and a helicopter. And here's the thing: if I were forced at gunpoint to get in a plane, as in a fixed-wing aircraft, and they said, right, at some point in this flight, the engine will die, or both engines will die, you'll have a total engine failure, and they said, right, you either fly this aeroplane, or you get in this helicopter, I would pick the helicopter all day long. All day long. And it's not just because I prefer helicopters, it's because, like, that's me judging the risk. So for example, if you have, let's say, with this weird analogy, we're flying in the middle of nowhere, okay? So if you had a total engine failure in a fixed wing aircraft, you need somewhere flat and relatively long, because yeah, or water. So you're either going to have to ditch in water or do a forced landing on land, and you better freaking hope that land is soft, or not soft, flat. And sometimes land can be deceiving from up high. Like you could look at a farm, go, oh yeah, that's a nice field to land in, and as you approach it, it's freaking bloody peaks and troughs all over it, or rivets, or whatever. I'm sure there's a farming term for that. A ploughed field, I guess. Whereas in a helicopter, well, this is where, you know, misunderstandings come in. People think when the engine dies in a helicopter, you just sort of die, instant death, insta-death. But it's not true. You basically float down like a sycamore seed. It's called auto-rotation, and you can literally pick a tiny little spot where you're going to land. There's a legend. I forgot his name in the Air Force. Basically, there was an RAF helicopter instructor who had a total engine failure back in the 80s or 90s, and he was over conurbation, and like a built-up area, and he literally had an engine failure at the worst time, or his student did, and so he then took control and he basically parked the skids. He found a supermarket and he landed in a car spot, literally, and everything was fine. But as the rotors slowed down, rotors droop when they slow down, and it took out like cars around it, which is quite funny. But yeah, that's how accurate you can be with a helicopter. And so yeah, that's why, forced at gunpoint, knowing that you'd have a total engine failure, I'd always choose the helicopter. And so this is where you can sort of control risk. If you have more knowledge on a particular subject, means you can take better risks, or you understand the risk element a bit more. Whereas if you don't have that knowledge, you could end up dying. And this directly applies to the world of trading, especially, and or business. So one of the reasons a lot of people don't take the right risks in business or trading is because they don't understand it. And so what you're then left with is listening to hearsay, people's opinions on, your mates, your mate Dave down the pub's opinion on whatever, but does your mate Dave down the pub have any understanding of crypto or or business, whatever it is? And in the day, I used to take business advice from broke friends that had never run a business before. Mind you, fast forward, I've actually paid for very good advice from business experts and still got in doo-doo. So yeah, where you get advice from is also another risk element. So yeah, that's the first point. So statistics, probabilities, and also risk isn't like, there's different types of risk. There's time risk, money risk, trust risk, social capital risk. I have a thing called the thank bank, and I guess the thank bank is like social capital. So you basically have a bank account with every single person that you meet, and you never want to be in the red. You always want to be in the black. So, and I think this is the weird thing, because I'm so anal about the thank bank, I never ever want to be in the red with anyone. I've got a weird characteristic that I never ask for help. I don't know why I should. Like my wife always says, oh, you never ask anyone for help, or like the other day, and it was like, you never asked me to get anything for the kitchen from you, or whatever. And I don't. I literally hate it when people serve me or do something for me, because I feel, although I shouldn't be like this, I feel I'm suddenly in the red, in the thank bank, and then I'm like, oh God, I'm going to have to do extra stuff to get out of the red into the black. But I guess that's me going a little bit too far with the thank bank. So yeah, the risk is, and I think more people should look at the risk in terms of time than money. I think the money risk is the thing that really drives decisions these days, but time risk is everything. It really is. The other thing about risk is, I wonder how many times I can say the word risk today. Danger versus worry, I guess, is another thing. So this is, like, I'm not a warrior, as in worrying about things, but Ellie is. And there have been some times I sort of have a little discussion, and I say, look, I worry about things that may be dangerous, not about things which are perceived danger. I can't think of a good analogy of this, but if there's actual danger, then I will be worried or fearful or concerned about something. But if there's no danger, I sort of shrug it off. And so I guess I've got a filter which I run through everything. Look, every decision, I sort of naturally do it. My filter is, like, if you have a decision, are you going to, yeah, Adam, you're right, perceived danger versus real danger. That's what I was trying to spit out. But yeah, my filter is, am I going to die or is someone else going to die? No. Am I going to get hurt or is someone else going to get hurt? No. Am I breaking the law or going to jail, or is someone else breaking the law or going to jail? No. Well, okay, just freaking do it then. Like, they are literally the three worst things that can happen to you: death, injury, law, or jail. They're like, that is literally the three worst things that can happen. So if this decision, whatever you're running through your head, is nowhere near these three bad boys, the three horsemen of risk, then stop over worrying, because it's not real, it's not dangerous. If it's not part of those three dangerous things, then the risk is probably time, money, trust, or social capital, etc. So then it's not real, it's not danger. So that's my sort of filter. And then risk naturally then evolves or sort of leads into risk to reward. Okay, so everyone always focuses on the reward, never the risk. Reward is simply a nice cherry on the cake. It's a nice bonus that is derived from good risk management. Okay, reward is simply the cherry on the cake from good risk management. However, you need to start thinking in terms of risk to reward ratios, or triple R, or as traders call it, R multiples. So for example, if you're going to risk £10 on something, a trade, and the reward is £100 profit, so you get your £10 back and make £100 profit, that's called a 10R trade. Or in other words, you make 1,000% on something. Well, if you ever, or maybe not you, but if I ever come across a 10R trade in anything, I'll take it. I don't give a shit. That tends to override pretty much everything. If there's ever a 10R opportunity in my life, I will take it, even if there are mitigating circumstances around it. If I see a potential business, which is a 10R trade, basically, I'll take it. And the thing is, if you have like this filter, this 10R filter, your hit rate can be dog shit. He's still asleep, he didn't hear that. Your hit rate can be like really, really bad. Like you can have a 90% failure rate and still make mad bad bucks. Mad bad bucks? Yeah. Mad stack, whatever it's called, I don't know. Look. So yeah, so 10R trades, 10R opportunities, 10R things normally results in good stuff. So when you look at venture capitalists or private equity firms, they will typically invest in like 100 firms knowing that they're all going to fail. So they'll probably put, a couple of million into 100 different firms, knowing that 10% of them will do okay and 1% of them will moon, and 90% of them will fail. And that's what VCs do. And so, and when you look at the, how much profit a lot of venture capitalists make, it's like, okay, well, why don't we do that in everyday life? Whereas most people are like shit scared to just even set up a new project, like as in a new mini business. So what if it fails? You've got to be prepared to, do 10 projects, knowing that one of them will do okay. And an okay project or an okay side hustle will more than offset the time cost, and the money cost, and the friendship and relationship and health cost that comes with setting up a business. So that's sort of the R multiple. And that's why I think I've got a bunch of trolls, because of this ideology that I have, and I'll always take a 10R or a 20R trade, etc. My hit rate in everything I do is shit. It is. Look at my business career. The hit rate has been dreadful. I'm probably running one of the worst private equity firms on the planet at the moment. Literally, I have a private equity firm. It's called Zenon, and I haven't done too well with it, to be honest. And I made a little update for my Zenonites last night, and I was going through all the past things and the hiccups that we've made, and I've screwed up a lot in that private equity firm. And the annoying thing is, even like every trader or every business, everything that we've done in that, they were all 10R trades, and we did land on one, maybe there's one business that was absolutely booming, and it more than offset the 9 other losers. In fact, there were probably about 10 businesses that we invested in. It doesn't help that the first bunch of businesses were distressed businesses. It's because I was trying to do turning around distressed companies, which is just a no-no. Don't ever do that. But yeah, the lockdown really hurt that winner, and so so basically what happens when things don't go well, time is your friend. Eventually things will turn around, maybe. So what was I going to say? 10R wealth. Yeah, I guess this then leads us into wealth. And by the way, I'm going to open up for questions in a sec. When you look at how our parents, school teachers, and just people all around you talk about wealth, what is the peddled message? What is the message that is peddled by pretty much everyone in your life from the day you've been born? And the message has always been, do well at school, get good grades, go to uni, get a good degree, get a good job, work forever, and then whilst you're earning, diversify your investments, have a big broad spread of investments across everywhere, etc., etc. We've all heard of that story, right? Well, we have at least 60 years of very accurate empirical data which proves that this is the worst advice anyone could ever give anyone, and it's the worst advice anyone can take. This is not my opinion. I'm just looking at data. So don't hate the data analyzer, me. Hate the game. Hate what's happened. This is pure facts. And simply because if you look at the distribution of wealth, it's top heavy. 1% owns 50% of the world's wealth. And so you then look at this data and go, okay, maybe the message I was taught as at school was bullshit. Maybe the general message, or maybe I need to do the opposite. And Warren Buffett, even like everyone says, oh, Warren Buffett is like the diversification king. He's not. He even says diversification is a hedge against ignorance. It makes little sense to diversify if you know what you're doing. They are almost word for word what he said. Google it. And so you then, oh dear. Oh yeah, okay, Danny. I'm gonna have to be quick. So when you then analyse the world's wealthiest people, as in people that earned it, not inherited it, you'll see a trend. And here is the trend. The trend is people strike it rich or strike it lucky or whatever when they concentrate their time-focused money on one thing and put all of their eggs in that one thing and then manage that one thing very accurately and are persistent and dogged in hitting whatever that target is. That's the true path to wealth. Whether you like it or not, again, don't hate me, hate the stats, hate the data. So that is the true path to wealth. You've got to find something which may be inherently risky to the average Joe, and then you've got to pile in money, focus, attention, time, and you've got to be persistent. And the results are never fast, unless you're looking at Binance. That is fast, but so that is the true path to wealth, and that's the road that I'm taking. So because I go head first, feet first into frigging everything I do, with at least a 10R outcome, I do have catastrophic losses. And that's why I've got trolls, because they always go, they love to dwell on my losers, when I don't give a shit about my losers. I've moved on. Even my mini wins are losers. Like, I'm still reeling from my Doge trade. So I got in, basically, long story short, I put roughly $1,600 into Dogecoin at about 2 cents. And I did a few side steps, but long story short, I ended up with about 100,000 Doge coins, all from $1,600. And when Doge shot up and hit 14 cents, I was like, huh, sweet, I've made $14,000 profit here. And so this was me thinking, I've turned $1,600 into $14,000. That is a remarkable trade for a bullshit shitcoin, because that's what Doge is. It is a shitcoin. Just look at the coin distribution. It's got an unlimited coin supply. Look at the amount of new Doge coins distributed on a daily basis, and you'll realise it's as bullshit as the US dollar. So what's happening, right? Anyway, so I thought, great, I've basically made 14 grand or 13,400 pounds or something like that. But then, so I got out 14 cents. What is it today? 70 cents. I'm like, oh, I could have had $70,000. But here's the thing, hindsight is bitch. Because, everyone's a pro with hindsight. But at the time, I did what I thought was the right decision. And it was, at the time, I looked at the market and thought, this is overextended, yada, 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 and I stuck to my thing. So, yes, it's a mini win, but it's also a massive loss at the same time. I can't believe he's not awake yet. He's going to sleep for like an hour. So that's that. So I've talked about VCs, private equity funds, uni degrees. I've gone on about that. If you just go to thewap.org and look at the beliefs page, I talk all about unis. Basically, don't bother going to uni unless you really, really need that degree to become a doctor or an engineer, etc. But if it's to go to uni and get 50 grand in debt to do an events management degree or whatever, don't bother. So that's Doge. Let's talk about, ADA. So look at Cardano again, another crypto example, because crypto is is out there at the moment. So if you go to YouTube and type Siam Kid and find my crypto playlist, I've got like a kabillion crypto tutorial videos on YouTube for free. You'll see in 2017 I made a video about Cardano. And I was very, very, very bullish about Cardano. And I was getting in at Cardano like 1 cent, 2 cents. And for most of 2017, I was piling up. At one point, I think I had something like 1 million Cardano, as in 1 million ADA. I was really ploughing into that, and it was good, and I made some profits. I got out, I can't remember when I got out, but I made some lovely profits in 2017 with Cardano. But here's the thing, I'm still in Cardano, don't forget, but when we look at the price now, it's like $1.40. And then here's hindsight, killing you, because you're thinking, oh my God, Simon, you had 1 million Cardano at one point, and now it's $1.40. You could have been rolling in Cardano profits, etc. But the thing is, you have to go back and look at the risk at the time. The risk at the time was, do I put a ridiculous amount of money into a brand new project that doesn't have anything running, no smart contract platform which is actually running yet? No, you don't. It's just silly. So you only allocate a percentage of it. And when you're looking at, I guess, portfolios, stocks, commodities, crypto, whatever it is, I've always maintained the thing, you invest in solid projects first, create a profit buffer, so when you've at least 2x, made 100%, then you can take a percentage of those profits and then re-divest or rebalance into more exciting, riskier, but maybe more reward coins. And that's what I do. That's what the Kryptonian portfolio is. There's always two phases of the Kryptonian portfolio. The safe phase, where you create that profit buffer, then the let's go large phase. And when you're going large on freaking profit. So it's not costing you anything. And so that is how to do proper risk, not going all in life savings on some dodgy new project that may or may not work. So yeah, let's quickly go through some of the questions. That's basically all I've got to talk about today. He's gonna wake up. So I'm trying to get Ellie to make him go to school on Wednesdays, because Wednesdays is his day off. I'm like, he should go every day. Then I get a day off. So right, let's go through the questions. Adam, 10 archers versus 10 villagers. Age of Empires quote, love it. Mosin, how do you work out risk reward for 10x? Yeah, well, it depends on what the what the investment may be. Like, for example, if there's a trade and you see that there's a real possibility of it hitting $10 and you're getting it at $1, that yeah, so you just have to look at the perceived profits or the potential profits to work out your R multiple. With business, like, no matter how small your side hustle is, it's going to be well in excess of 10R, well in excess. Sometimes businesses are almost infinite R multiples, because like let's say you invest $5,000 into a project, a side hustle that then eventually grows into a proper business. Well, even if you get that side hustle turning into $50,000 a year profit, which is a modest one man, one woman band business, well, what is the R multiple there? Like, let's say you make $50,000 in your first year, and you've put $5,000 in. I can't even do it. Just do that's like 100R, isn't it? And then next year, let's say you make another $50,000, or let's say next year you have a really bad year and make $25,000. Well, what is the ROI? It's still like the ROI is ridiculously good. So this is why I think most people shouldn't aim to create £1 million businesses. They should just aim to make 10 grand businesses to begin with. I know this goes against everything you've probably seen on YouTube with all these gurus out there, but honestly, having a side hustle that makes an extra 5-10 grand a year is a massive help for a lot of people. And then you'll also learn all sorts of stuff to then grow it. Chris, trolls are trolling from their mummy's basement, so if there's a choice between listening to the trolls or listening to you, I choose to listen to you. Chris, you are a gentleman. Thank you. And yeah, I have to say, hey, you've been on these live sessions, like every freaking live session since February, so I do appreciate your time. Thank you. Adam, Doge is purely greater fool theory at work. Yeah. Like, I know Elon is pushing it hard, but I just part of me thinks it's going to come tumbling down. But then a part of me thinks, if I was Elon and I had the capability of putting almost an unlimited amount of satellites into space, he could basically launch a whole bunch of satellites, which he could, if Elon wanted to, he could actually launch a whole bunch of financial satellites into space, covering the world, and they could all be Doge satellites. And so, yeah, he could actually turn Doge into a global financial system in itself with a SAT network. That's interesting. I wonder if he'd do it. Probably not. Mike Parr, I bought 1 million Doge in 2017. Yeah, honestly, we all had millions in 2017. Same. For the price of a can of Coke, sold it for the price of 2 cans. You made a profit. That's 2-hour trade there. Sukdeep Sandhu, what is the best resource for financial news? I.e., what's happening in crypto world and forex? Nothing. I literally don't keep up with the news. Don't. I honestly, I do zero news research. Like I'm in a few, I'm in a few Facebook or my Facebook groups, etc. But if anything's important, it'll pop up on your newsfeed, and that's what I curate my Google feed. So anything that I'm interested in, Google goes, oh, Simon would like that, and it'll just present it to me. And I'm like, oh, sweet, cheers, Googs. But yeah, I just there's no point to keep up with it. You have methodology and you stick to it. So for me, for crypto, for example, I have my Kryptonian portfolio. Again, check out my YouTube, it's there. And I don't need to follow new fancy things. I've basically just bought the best coin in every sector. So I don't care what sector goes up, I know of it, I'm in. If I hear, the prediction markets are now booming in crypto, great, I know it, I've got it. So that's one of the beauties of it all. Adam Stevens, max loss times 10 equals 10R potential. Yeah. So that's that. So does anyone? It's weird. I don't know if you can we do an experiment, folks? I want to end this with examples of you lot. So if anyone here has had an example where they had a decision to make, where they analysed the risk and whether it was a good outcome or a bad outcome, I want to see if you can actually share. Put your mic on. What is this? Invite friends? No, I'm just going to press some random Facebook Live buttons here. Ooh, no. Okay, I think I can bring someone on camera. Does anyone fancy talking? Alex Hristov, opinion. When Elon says Dogecoin, he really means BTC, but can't say that as his PLC owns BTC and he'll get in trouble with the SEC. Hadn't thought of that, but Alex, you are absolutely spot on. Yeah, because he's part of public companies, i.e. Tesla, there's lots he can't say. Because he'd then be talking up his own book, which you can't really say. So, interesting. So, yeah. Does anyone fancy sharing their mic or screen? I think I can invite people here. Just for experimentation purposes. And plus, I want to hear people's stories of, risk and reward. Come on, there's 27 of you here. Surely one of you has a story that they can share. Plus, I want to see how this would work on this Facebook Live. Nope. It's either that or we're going to cut this short. Hey, okay, Sukdeep, let's open up. Okay, so if I press this button, add. There, friends, okay, add. I'm adding Sukdeep. I hope that's how I pronounce your name. It says it's adding. Come on. It says it's adding you. Maybe you have to accept something. Oh, I've got a bad back with this baby carrier. Imagine me, yeah. Sukdeep, I've added you. Can you accept it? Surely Facebook's like prodding you to press something. Can I bring you onto camera? It's coming up your end. Interesting. Ah, hey mate.
Hey.
Hey, I can hear you. What's your story?
Oh, that's good. Okay. So, what was it? Back in 2019, I was advised to get some Ripple XRP. So, it's the first time I did any crypto trading whatsoever, but it was from a family member who is very intelligent. So we put 2 grand into it, and as soon as we did, it dropped from 32p to 17p. So it was a bit a bit bad, but we held on to it, and it's something at 123 now, or something like that. So I don't know whether it's a risk story or not, but basically we had the money that was available. We wasn't desperate for it, so we just waited and held out, and it seemed to work.
Nice. Okay, so the risk analysis back then was that you're putting your investment research in the trust of your clever friend.
Yeah, basically.
So yeah, we've all done that. I've done that many times, and it's hurt many times.
Yeah. So, but yeah, it worked out. I mean, he put 25 grand into it, so that's why we thought, well, if he's put 25 in, we can afford 10. So.
Wow. And here's the thing. Normally, bad trades or bad decisions are often softened over time. Time is your friend with risk sometimes. There's a lot of mistakes in life that you can make where time is the healer. I know it's not, yeah. So the fact that you hodled and didn't sell, your quid's in.
Cool.
Nice. Do you have any other do you have any non-trading examples of where you had to make a decision and weigh up the risk?
I got a long story of them, to be fair. But
can you condense that into 30 seconds?
Oh God. Right. So I worked with my family for 20 plus years. Got married. My family didn't like my wife, so they made me choose between the family business and my wife. Chose my wife. Lost everything. But 8 years on now, we've got two businesses of our own. Our third business on the way. Property portfolio of 9 properties. So made the right choice there. Really. So if it wasn't for her, I wouldn't be back.
Wow, that's really shit of your family to make you choose like that.
Yeah, tell me about it. Very shit.
That is. Surely your family should always want you to make the best decision for yourself, not the best decision for the family.
Yeah, I can't really explain that. Anybody I tell that story to can't get their head around it either. You know, it was a family business. The idea was, I mean, we built it into a multi-million-pound business as well. And when my old man was going to retire, we were going to split it between me and my brother. But when it come to my share, they were like, well, no, we don't like your wife. So if you want your share, you have to buy it. I didn't take a wage off them for 20 plus years, so I was screwed.
Oh, nice one, mate.
Yeah. So.
No, yes, that's good.
Yeah, thanks.
Yeah, it's interesting. That adds another dynamic where principles come into your risk analysis, and sometimes, if you stick to your principles, you can end up making sometimes the wrong decision. Not saying that yours evidently was the right decision, but I'm just thinking there's been times in the past where I've taken a decision based on principles, where, yeah. In fact, here's another thing. In fact, here's an example of that. So I have a marketing company. It's a creative design agency, and someone who I really didn't want to do business with was insisting that, you know, he wanted to be a customer, and I was basically batting him away like for a good old month because I knew that he'd be like a really problem client. And in the end, he was like, "Come on, Simon, I really need your help. Blah blah blah. I love what you do." Blah. And then I was like, "Okay." So the thing with marketing companies is that you have to be super anal with your scope, as in what you're going. You know, you both parties have to agree and understand what each party is going to do. And so we created a very precise scope, as in we are going to do this, nothing, nothing more, whatever. Because when scope creep comes in, which it always does typically, resentment kicks in. Anyway, what happened is that we did solid work for the month. We then invoiced the person, and 10 days later, still hadn't paid. And some gentle prods, emails, etc. 20 days later, still hasn't paid. And then I basically said, look, we're having to cease all services for you instantly because you're failing to pay, your obligations, yada, yada, yada. And then he was like, oh, I'm poor, I got no money. And like, part of the things that we did before we even took on board was like, are you 100% confident you're happy to pay this fee, blah, blah, blah. And he was, oh yeah, money's not a problem. And so, and we did exactly what we did. Now, here's the thing where principles are screwing over my decision making, because it wasn't much. He only owes us £960. That is it. Like that is literally all he owes us. But the fact that he's being an utter douchebag means that my principles are like, right, I'm going to enforce this. I'll pass the debt on to debt collectors, and if necessary, I'll get my legal lady to go to the small claims court, etc. And so my principles are basically making me expend time and money to try and get back that little amount of money.
Yeah.
Just because of my principles. Whereas if I was looking at this from a risk to reward in terms of time, effort, and energy and mental capacity, I'd be like, oh, look, bad debt, move on. But principles getting in the way of good decisions.
Yeah.
So I don't know. What would you guys? What would you? Or I mean, what would you do in that situation?
Probably would have written that off, because, like you said, by the time you spend money trying to get the debt back and everything, I mean, obviously debt collectors are going to take a percentage of the fee, so you're not going to get your full money back as well.
Yep.
So it's a lot of time and effort, isn't it? If it was a large amount, then it's probably worth collecting. I mean, we've had a few clients where we've learned with the wills, because my wife does wills and trusts and lasting powers of attorney. So we've had a few clients where she spent hours and hours with them, started the paperwork, and then they never end up paying. So now we've just kind of gone with cash up front, and then all your paperwork will be done. So we've changed our approach to that sort of thing. But I think, for that small amount, I don't think, on principle, I'd love to get that money back just to kind of dig me hole in. But after a bit, it becomes not worth it, does it?
Yeah. I know. It's just frustrating. Like, this is another Norfolk person, and like, he's now deleted me on Facebook. He says he's moving away from Norfolk because no marketing companies would work with him. I wonder if I'm the first I'm probably not the first marketing company he screwed over, based on what he's doing. But anyway, do I say your name correctly? Is it Sam? How do you say it?
Just call me Suki for short.
Suki. Yeah. But how do I say your first name properly?
You said it right, Suki. That's my first name. Suki.
Suki. Oh, nice.
Yeah.
Sweet. Awesome. Yeah, thanks for coming on.
No, thanks for letting me on. I really appreciate it, and thanks for the free course as well. I'm sure we'll.
No worries.
But it's it seems pretty interesting. So cool.
Awesome.
Right, I don't know how do I end this now.
I don't know. I'll try. I'm pressing an X. Maybe that'll do it. Okay, Amanda, Chris. The fact that it's that small amount makes it worse on his part. Yeah. Amanda Hunt. That what these kind of people rely on, that you won't spend any time and money to get a small amount back. Yeah. Quite right, Amanda. I agree. Third, Hutchinson. I have a story about non-financial risk and diversification if there's time. Yes, please. I'm going to try and find you. Third. That's a cool name. CHUDD. Come on, where are you? Apparently, Facebook doesn't think you exist. Come on, how do I add you? Add. There we go. Third. Invite sent. Facebook Live would be way better if there's no lag. Hey, mate.
Hello.
Oh, is that Tom?
Yes, it is. Yeah, Thad's nickname.
Ah.
Yeah.
I get it. Sweet. Hey, mate. Yeah. What's your story?
Right, cool. Well, it's about my skiing when I was growing up. So, my dad loved skiing. He's a skier, and my mum hated it. She just didn't enjoy it. So, and when I used to go to like race days, so when I was a lot younger, I used to do racing, and then when I grew up a bit more, I moved on to sort of freestyle skiing. And I always found my mum would say, make sure you're careful, be really careful, and all the rest of it. And if I took that sort of hesitation into the gates or going over a jump or something, 9 times out of 10, I would fail. It wouldn't work. Yeah, it just wouldn't land it. And the times when I kind of thought, well, to be careful, I just have to give it all my focus, all my attention, go all in, and that's the only way I'm going to get down this, or not like crashing through the gates or landing on my head or something like that. That was to just go all in. which I think kind of works into
That is so
diversification
true.
as well a little bit.
Yeah. Yeah, because if you're not going all in, that means a part of your brain is not thinking about the maneuver that you're going to do.
Yeah.
And therefore, yeah, you're increasing the risk of you screwing up. It's the same with gymnastics and doing backflips and stuff. If you go into a backward somersault half-hearted, you're going to hurt yourself.
Mm.
So, oh mate, what sort of tricks can you do?
So I can do a 360 very comfortably. A 540 or
Nice.
sometimes if I spend a bit of time on snow, I'll get used to it, and it's just sort of different grinds and fails and stuff. I've done flips on airbags, but I just haven't had the bottle to do it like on the slopes yet. So if there was a nice powdery day, I'll probably
Nice.
go,
Awesome. Yeah, it's in fact your story is actually reminding me of something else in terms of risk, and I guess there's the mental risk element. So, like, I play golf, and golf is all in the head, and so sometimes you can be playing a really good round. You know, you've got your iron, you're playing really good, and then there's one hole where you just become an utter idiot, and it's like left, right, army golf, and then you end up getting like an 8 or a 10 on a hole. And that one hole, will then ruin, like for me, because I'm weak-minded sometimes, it'll then ruin the next few holes for me. Because I'm like, oh, I'm playing like an idiot. And I was thinking the other day, like if golf, like one bad shot will then screw up the rest of that hole and then subsequent holes. Imagine what your brain is doing to you in everyday life. So, and I see this with some other people, they may have one bad hit in business, and then their mind will dwell on that one bad hit, and then it will ruin their business for the rest of the year, the rest of the decade, or whatever. And yeah, and it's probably the same in skiing. Like some people I've seen, they have one bad fall on a run. It could be even on a blue run, bad fall by, freak accident, whatever. And then that's going to completely jeopardize their thoughts of skiing for the rest of the day, the rest of the week, etc.
Yeah.
So
yeah,
man,
I see that a lot.
It's all in the head,
especially if I'm, say if I've like a morning group or something, and it's a repeat group throughout the week or something like that. I can always tell if one of them's had a bad afternoon when they come the following morning, and you just have to completely rebuild them. Really, I mean, passing on the knowledge is one thing, but it's kind of guiding their mindset is the biggest challenge, really. Because if they're not ready to learn, then they never will. So it's. But yeah, I'll always see that someone takes a big hit, and then you think, oh, right, we've got to get back to square one again and build them back again.
Nice, awesome, mate. Tom, thanks for that. Much appreciated.
No worries. Thanks for me.
I'm gonna have to X you out now.
Yeah, no worries. Thank you.
Sweet. Thank you. We're gonna have to start rounding things up. Just answer the last couple of questions. Mostly, in what businesses would you recommend 5K a month? It doesn't actually matter. It really doesn't matter what business idea. You could be selling cupcakes to make $5 grand a month. It's all about the implementation. It really is. So, I mean, I remember someone, like when I first announced that Ellie and I were setting up this fairy business, myfairypenpal.com. There was someone on Twitter went, "Are you joking? This is like the most ridiculous idea ever. Who's going to spend £15 a month to get letters sent to them, every week or whatever?" And I thought, yeah, probably, why not? But it's how you execute it. And guess what? Like we're doing well now. So I think the answer's not what you want. I think if you're in the position where you're thinking like, what business is going to make me this amount of money, what you're actually lacking is the skill thing. You've got a knowledge deficit right now. So the first thing I'd highly recommend you to do is go to the wapper.org and just do the free trial. It's 30 days for free, no automatic rollovers or anything like that. So just do the free trial, and then you're going to learn a whole bunch of other stuff. And then if you join the actual WAP, it's only 300 quid a year for 82p a day. Do the Facebook marketing module. And I know it sounds a bit weird, but the thing is, when you understand how to drive traffic, you'll then be able to filter out bad business ideas. Like every now and then I hear someone go, "Oh, what do you think about this business idea?" I'm thinking, probably not, because I'm trying to think how would I get eyeballs onto that business idea, and I normally I sort of filter that business idea through Google, either Google AdWords, Facebook ads, or lump email, as in offline marketing, where you're actually sending out physical letters, etc. And I mean, that's just my skill set. If I can't get leads from online or offline like that, then I wouldn't be able, I personally wouldn't be able to do it. But everyone's different. I got business mates that have done really well in their businesses, and they've never, ever, ever, ever done marketing, ever. And I'm like, really? And then I was like, how do you get customers then? And he was, oh, I pick up the phone and I just start calling people. Well, that is marketing to a degree, or sales, mind you. So yeah, there's loads of things. But I think the question, mate, one of the questions you could probably think about is, let's say you're making £10 profit on some sort of service-based business. Then you just need to think about, okay, how can I get 500 people to pay me 10 quid a month? That's £5 a month. And then, or how can I get 50 people to pay me 100 quid a month, or 5 people to pay me £1,000 a month? Then all of a sudden, like you can start filtering some sort of business ideas. 100% mindset. Chris said, "Can I have the name of your marketing company, please?" Took deep. It's called Panoptic Partners. So basically, we build blisteringly fast websites now. We can create portals. So if you're a content creator, you can deliver content on a portal. We can connect CRMs and basically automate a whole bunch of your business. Like a lot of our businesses are now fully automated to a degree. We do digi-marketing on some instances. We don't like doing digi-marketing for other companies unless the business owner is fully aware of, because a lot of people go, oh, yeah, I'm going to put £1,000 in Facebook ads and expect 10 grand back. It just doesn't work like that. And we've got all sorts of other bits and bobs. So the only reason we have Panoptic really is just to facilitate the businesses in our own ecosystem. But obviously we have spare capacity, so we get other clients as well. So yeah, always have to have a chat. Amanda, I had a small risk reward with skiing. I hadn't skied for about 13 years. I was only really a novice. I went to the top of the mountain and had 5-minute struggle to even get it on the slope. I snowplowed for a while. In the end, I decided to just go for it straight down the mountain. It was the most exhilarating moment I've had. Google knows what would have happened if someone was in my path. Google, God, go, yeah, nice, cool. Well, that's 52 minutes, folks. I'm actually surprised it's 25 for you here, so thanks. Normally, by the way, we do these at midday and on Zoom. So yeah, tomorrow we are going to be talking all about basics of crypto. Okay, I'm getting a crazy amount of people private messaging me saying, "Hey, following your videos, how do I actually get money into cryptos, etc." So tomorrow I will be going down through the basics, like opening up a Coinbase account, how to send money to your account, yada yada yada. So that's that, and then really for me it's just a time-saving exercise because I'll do that session tomorrow and answer every basic question, and then from now on, whenever someone asks me that question, I'll just send them the link to that video. So yeah, right. He's stirring now, so I better get going. Late lunch for him, and yeah, thanks everyone for watching. Very much appreciated. Yeah. Toodles. I don't know where the end button is on this Facebook Live. Yeah. Oh, hey, Romy, you're awake. Romy's awake. Good timing.